Hey there, my name is Raj Tekchandani and I'm the founder of SmartCapital, real estate investment firm. We help busy professionals like you diversify their investment portfolio through investing in real estate syndications. So what is a real estate syndication? That's what we're going to talk about today. Well, I had first heard of real estate syndication when a friend of mine presented me a deal in 2012. I couldn't understand what he was saying or how somebody could buy a 200 unit portfolio. It just didn't make any sense. So I actually went to do some research and learning around it. I have been an investor in single family homes for a while, but had not invested in or heard about syndications. That was the first time I had heard about it. So it was hard for me to comprehend that how such groups of people were collecting together and collecting investors to make an investment. I couldn't comprehend it. So basically I said no to my friend as an investor, but again then I went to do some more research in finding out more about syndications. And I found out that for some reason SEC did not allow real estate syndication opportunities to be publicly advertised. And that's the reason not too many people had heard around it. You had to be in the inner circles to invest in these. But luckily, SEC now allows certain opportunities within certain guidelines to be publicly advertised, which opens up gates for a lot of people to invest in this way. So let's get back to what is real estate syndication. Well, the term syndication means pooling of resources. A real estate syndication is a group of people coming together to pool their funds, their expertise to invest in real estate. Let's say if you have $50,000 to invest in real estate, your options could be you could invest it as an individual into a rental property, but that would also mean that you require time to find the property, run the numbers, negotiate the contract, do the inspections, and then find tenants. It's a lot of work and very actively managing the property. But if that's not you, real estate syndications are still a great alternative that allow you to put your money into real estate without having to do all the work. Finding property, managing it, it's a lot of work, like I said. So you can take that same $50,000 and invest into syndication as a passive investor. So let's say you contribute $50,000, somebody else does another $50,000, there's another investor that's $100,000, and by pulling in all these resources, the group could now buy a larger property, such as an apartment complex. As a passive investor, you don't have to do any of the work managing the property. A lead syndicator or a sponsored team does the day-to-day management, that is the active work. And in return, they get to share some of the profits. How does it work? So syndication, like I said, it's two groups coming together: the sponsored group, the active participants, and the passive group, so the limited partners. The general partners, or also known as the GPs, do all the legwork of finding and vetting the property and creating the business plan. Essentially, they are doing all the work that you would have to be doing if you were the owner or a landlord of a rental property. This is just on a massive scale. The general partners find the great deal. They put together a team to execute on the intended business plan. The limited partners are passive investors, just people like you and others, who put in their money into the deal, which makes it possible to acquire this large property. Together, the general partners and limited partners create an entity, usually an LLC, that holds the underlying asset. The entity has a split structure, say 80-20 or 70-30, with the LPs or limited partners getting a bigger chunk of the capital. You as a limited partner are part owner of that LLC holding the asset. Because the LLC is a pass-through entity, you get all the benefits of direct ownership of the real estate. Once the deal closes, the general partners work closely with the property managers and other maintenance staff to improve the property according to their business plan. During this time, the investors, the passive investors such as you, receive regular ongoing cash flows through distribution checks, usually every quarter or sometimes even monthly. And once the planned renovations are complete, the general partners could either refinance and return partial capital or sell the property and return the entire capital and all the gains to the limited partners with some profit splits to themselves too. So that's basically real estate syndication. It's a group investments with active general partners and passive, limited partners coming together. The general partners are executing the plan. Partners are providing the capital in return for equity. They both split profits, and that's a real estate syndication. Hopefully that helps. If you have any more questions, check out our website, smartcapitalmanagemgmt.com, where you'll find tons of other resources to learn about real estate syndications. Until next time, it's Raj signing off.